Hey, Kevin here, top 100 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. There are four stocks that investors and experts are looking into and are picking to be the biggest winners of a Biden presidency. So cannabis is one of those. I'm not very confident in those because there's a lot to go. There's a lot more to go in terms of getting it actually passed. However, these stocks are in the EV category, electric vehicles. And Biden has explicitly said he has a $2 trillion plan that he wants to roll out to help infrastructure for electric vehicles. And he also wants to extend tax credits for electric vehicles through 2030, which means two things. Number one, there's already a tax credit on the books. So it's something we've already done. And this seems, at least in my view, something that is more easily passed because it helps with jobs. I guess you could say the same thing with marijuana as well, but it's less controversial, at least in the more conservative circles, and should be a little bit easier to get past. So I want to discuss each of those four stocks and let you know the good, the bad, the ugly, and then you can feel free to investigate more. But also, as you are sharing this video, make sure you hit the share button right now. Yes, you hit the share button. But also, of these four, let me know what you think about them. Type in your favorite, what you think, what you don't think, good idea, bad idea, so on and so forth. Now, either way, a plan is only a plan until it gets through Congress and actually hits the president's desk. So you can take that for what it's worth. I still feel the same way about the marijuana stocks. Short-term possibility, but until it gets passed, there's that. But I do think of the two, if I have to pick electric vehicles or marijuana, I'm picking electric vehicles because I can already see those on the street and it's already legal in all 50 states. I don't need to figure out nothing new. I just need to ramp it up. All right, so here are the four. So the first one is NIO, N-I-O. It's a Chinese company. They make electric vehicles. The problem here is that it was $1.66 last year. It's up to $41 now. That's a very quick turnaround. That is not as bad as others we've seen, Kodak being one of them. So we'll see there. I have not personally seen any NIO cars, so there's that. But there has been growth. Wall Street does like the stock, so there's some confidence around that. I'm not so big into it yet. I need to see a little bit more from them. By see a little bit more, I mean I need a little more consistency, because when you go from under $2 to 40 in a year, great if you pick them up at $1.66 or anywhere in between, but I'm gonna need a little bit more evidence. It seems a little, I would say, shallow. So if we run into any snags, let's say that the bill doesn't get passed or things don't go the way that electric vehicle makers need it to, my guess is that this one's going to fall very, very hard, whereas a Tesla may not be phased as much because there are already Teslas on the road. They're already doing well. They were already up 400% before the presidency, before all this stuff started to kick off. NIO, not so much. They just picked up randomly, right? I think it was, I have it here, June 2020 is when they started to take off. Before then, they hadn't really done much of anything. But again, there are a bunch of Wall Street analysts that like it, a bunch of other average investors that like it. Now, whose opinion do you want to weigh? Totally up to you. But that is one of the stocks that's coming up most often when people talk about electric vehicles. Number two, Tesla, obvious one. I mean, they are electric vehicles. When people think about electric cars, they think Tesla and almost nothing else, even though they're not the only maker. NIO clearly is one of them. We'll talk about two others, but like Ford, GM, they make electric cars too. People don't talk about it. There's an electric Mustang floating out there now, which, I mean, it looks pretty cool. But, people aren't really excited about those, but they are excited about Tesla. Obviously, so number one, I do invest in Tesla. I do have it. I am hoping at some point they get added to the S&P 500. We'll see. We know, and I've done some videos in the past, they have hit the profitability mark. So they've been profitable for a few quarters, which is great for them because they hadn't in some time. It's up more than 400% this year. It's been one of the best stocks for the last, 3 or 4 years. So I'm most confident in them because I've seen them do it. I haven't seen a lot of these others. Now, the past does not predict the future. It does not. But knowing what we know now, they were already up 400%. They've been up over the past 3 or 4 years. You've got a president coming into office who wants to invest in electric vehicles or the infrastructure around electric vehicles and extend tax credits for those companies and those buyers, it's a hard thing to miss. And they already did the stock split, so it feels a little less expensive, which usually helps the stock over the next, I think it was 2 to 3 years, based on previous research. I mean, so it's a real hard thing to miss. I'm not focused on the stock price because some people, oh my God, it went from, however much it was, and that's $400 a share or whatever it may be. I do it on Cash App. I put in like $25 every 2 weeks. It doesn't have to be overly expensive, and it's done well. Again, you need to analyze to see if it's for you, because I still don't like Elon Musk. Even though I'm an investor, Tesla is just a tiny, tiny piece of what I have overall, because I really don't trust that man. That man's crazy. So that's just on my own personal opinion, but on paper, they do have the money. They are doing well. They are picking up sales. And if the government can support them and clear the way for them to grow even more, that's going to be a big asset to them. Number 3 is Plug. So they make electric pieces to vehicles, so like batteries and all the stuff you need, similar to we had talked about with Scott's Miracle-Gro in the marijuana industry. They're not necessarily making the cars, but like the batteries, the parts, all that kind of stuff. Now, this company has been around since the 2000s, and they were up to close to $1,000 a share back in the 2000s. We're talking like 2000, 2001 era, and then they fell off, like all the way off. A year ago, they were down to $2 a share, and they are up in the 20s, if I'm not mistaken. I want to double check that real quick. I don't have the current price. Sorry for the quick look away. So yeah, I was right. They're $20.01 today. So, a year ago, they were $2, now they're at 20. Again, that's a quick turnaround. Great if you invested at any point between then. We'll see what happens. I think it makes sense. I don't think this is bad. I think it makes sense. I am curious as to what happened between 2000 and now. Clearly, I didn't have 2 days to research what happened in the last 20 years. But based on a quick glance, I mean, it makes sense. If things go well for Tesla, things should go well for Plug. So we'll see what happens. I'm kind of like scale of 1 to 5. I'm like a 3. We'll see what happens. I think if you get it at 20, in theory, if things go the way they're supposed to, 20 is a decent price for it. If I look at the last 6 months, I mean, it's up. Started at $5 6 months ago on May 11th, and again, it's at like $20 today. So take what you want out of that. I'm more hesitant because anytime you go from $1 to $2 and then you're adding another zero, you're adding another digit not overnight, but in 6 months, in a year, it's like, well, what's going on here? Is the company 4 times better in this case 6 months ago, went from $5 to $20? Is it really 4 times better between now and then? I really can't call it. So somewhat of a red flag. I get the logic though. I didn't get the logic with Kodak. That didn't make any sense. But I do get the logic here. And with this entire sector, it makes sense. But again, it making sense and it actually happening doesn't always go together. All right. So the next one is Nikola. Now, Nikola, I'm going to pull up its stock price real quick because I thought it went up today. I just want to double check. It did not. It was up earlier. Now, Nikola, we had talked about before. It is a Tesla tag-along, is what I like to call it. Maybe an imposter. They had a bunch of negative press, but the problem with them is they're not making money. They're not making money in the way that they should, and they're just not making money, period. So here's the story if you had missed it before. Nikola went public earlier this year. They're trying to be a competitor. They're definitely the most name brand competitor to Tesla. They want to make electric like semi trucks and electric pickup trucks. That's where they want to focus. And it's a smart idea because pickup trucks are the best selling car segment in America, and it has been for like 30 years. The best selling car is a Ford F-150. So in my mind, if you can put together electric with pickup, boom, you got a great selling idea. Here's the problem. Earlier this year, a report came out that said they haven't made any cars, which is true. They have 0 cars right now, today. And that a lot of the stuff they were putting out was just, fanfare, kind of like Firefest stuff. A lot of talk, a lot of great graphics, but you really don't have anything. their CEO, I'm sorry, he was chairman. I don't think he was CEO. But anyway, their most recent financial report, the one before this one that just came out, the company made like $36,000 from someone who worked at the company. So it's like me buying my own course and saying, look, my company made $1,000 or whatever it was. They only made like $36,000 or so. That was it for that entire quarter. For 3 months, this multi-billion-dollar company, the company is valued at $7 billion, only made $36,000 in an entire 3 months. This quarter, they made a grand total of $0. That's it. If you go to their financial reports, you will see a huge zero when it comes to income and sales and revenue. All those words are the same, but they made no money. I don't understand how a big time major company can make $0 despite their partnership. I think with GM, General Motors. They ain't made no money. Like literally no money. It's one thing where it's like an Uber, where like Uber and Lyft, you're losing money, but you are making some. You're just spending way more than you're bringing in, but you got some money coming in, right? Like people are riding now. Pandemic, different story. But in general, people are riding, but you're just spending way too much. But at least you're bringing money in. This company is the opposite. They are making $0, and they were down $117 million this quarter. So for me right now, that is a definite no. This is literally the definition of hype. There's no reason why this company is at $18 a share. Like in my mind, it should be at zero because you're really not making any money. And you can go back and watch the Nikola video, but I'm not a fan right now until they start making money. Then we can talk about like, oh, okay, like this makes sense. And still start making legitimate money. Your employee, CEO, chairman of the board, you buying stuff from your own company, I'm not counting that. That's like, selling cookies to your mom. Like, yeah, I'm a business owner. 100% of my revenue came from selling cookies to my mom. Like, come on, man. Like, that doesn't make sense. So of these four, Tesla is heads above. Like that's a clear winner in my eyes over the Biden presidency. And it's a whole 4-year process, and he ain't started the job yet. So be patient. It's a lot of stuff that can happen between now and then. NIO and Plug are, to me, relatively unknown right now. So these two of the four are high risk. I think, and I'm writing them down so if you guys can see it, but I think NIO and Plug, very high risk. It makes sense if you consider doing it. I would be looking at putting like 1% or less of your overall money into it, just because you never know which way it's going to go. I think you can go up to maybe 5, maybe 6% if you want to be a little more aggressive with something like Tesla, because it's a little more known commodity. But overall, the economy or the stock market is still shaping itself out. We saw what happened yesterday. The market was up like crazy, kind of gave up a little bit at the end, but there's still some things we need to figure out. For example, you get ExxonMobil and other like oil companies that went up today, whereas tech went down. That doesn't actually make sense. There's no way that oil companies and electric companies are going to thrive at the same time. They're really opposites. So when you think about that, know that the market is trying to figure itself out. And we'll see how it's going to play out over the next several months. It's not a question that's going to be solved between now and December. It's literally not, because he didn't take office until January. And the first thing on his plate is COVID. And there's just a lot of things that you just want to pay attention to. So right now, if you want to look at that, I think Tesla's the best of that group. You still want to look into healthcare, United Healthcare, maybe Pfizer, maybe Johnson & Johnson. And you still want to have a toe into the consumer stuff, with whether that be Walmart, maybe an Amazon. I know Amazon is down now, but hey, Amazon going to be around. So looking at things like that, the Dow Jones, the Costco's, I think those are the 3 areas that make the most sense with what we know right now, which is not a lot. All right, so there's it for me. I did a lot of talking, but make sure you hit the share button, and I'll talk to you guys later.